must become that which I say I am. Therefore, I boldly declare, I am rich.
Hello traders, welcome back to this session. In my first mentorship class, I actually was unable to record the class based on some technical issues. Now I am teaching you this live. I'm going to show this public to everyone. Now the topic is institutional key levels. That's what I want to teach. Institutional key levels, also known as support and resistance. Now this is not the support and resistance video, the regular support and resistance video you watch or you've been watching, but this is an exceptional, a deep dive into support and resistance and how to be able to form a strategy using the concept of support and resistance. How you can be able to spot out high probability setups in the market using support and resistance. So if you watch this video and you find value in it, you can contact me for mentorship. You can check the description box down below this video. There is a link to my Telegram channel. Just click on that link and join a Telegram. Also, I want you to give this video a thumbs up if you find it helpful, okay? And drop your comment in the comment box. Let me know the next topic you want to treat, and also let me know where you are watching from. Then if you have any question, ask me in the comment box. I'll be on hand to attend to them almost immediately. All right, so let's go straight into the chart. Let me show you how to trade the institutional key levels profitably. Let's go there. Yeah guys, we are here on the screen right now, and I'm going to be making sure that I explain this to a layman's understanding. I'm going to make sure that you understand it. I will explain the much I can so that you'll understand it. I'm not just going to explain or teach support and resistance the conventional way that you have been seeing it, whereby they just teach you how to draw support and resistance without you knowing how to really make money with it. But I'm going to show you a practicable I'm going to give you a practicable explanation of support and resistance. I'll show you how to use your key levels and base a strategy on it and become profitable. Now you have a chart like this. You have your chart before you like this. What I want you to do, number one thing you should know is that you are only paying attention to the areas closest to your current price level. You can see where the price is right now, so you are paying attention to this area. You have no business with what has happened within all these areas. You don't have any business with them because you are not swinging. I'm not sure how to swing. I day trade and I scalp. I do more of scalping and day trading. I hardly swing. Okay, so just once in a while I do that. So you pay attention to this area close to your current price level. Let's go. Yeah, so we pick our two mark here. This is our first key level. We have marked it. Very, very important. Now we want to mark the second. You can see this high here is where we're supposed to mark, even though it's too far. It's very, very far away, but let's just mark it. Okay, now you can see somewhere here, you can see this place, right? So we'll mark it also. So the next thing we're going to do, because that's just all we can see here now, next thing we're going to do is to go to our 4 hours time frame. So go to our 4 hours time frame. Now we also pay attention only to these areas that you can see. As much as your screen can enter, this is just the area our screen can enter now. So that's where we're paying attention. Now you pick your two again, mark here. Listen, when you are marking it, when you're marking your key level, you are taking it as a zone, not a solid line, not one single solid line like that. It's a zone, which means price may cross it a little or may not really touch it, but we come very close to it. Okay, just like you see here, price cross them a little. Here price not really get to it. Here price cross it a little. Here just tapped on it, just like that. You know that it is a zone. By zone I mean it affects all the areas within this line. Okay, all the areas within this line. It's not just where the line is, but all the areas around it, within and around it. That's what you must have in mind. So we've marked that key level. Let's go for the next one. We have another one here, so mark it also, extend it like this. So we have our key level. You can go ahead to continue marking, but these are the ones that are important to us now. Okay, now we also had another one here. Let's see, we also would have had another one here. This is it. So we marked it also. So you can go to our H1 to see if there's anyone to adjust or anyone to. Okay, so basically this is what we are going with. We are going with this. It's okay like this. So I like to mark my key levels using my daily time frame, my 4 hours time frame, and my 1 hour time frame. Now after marking my 1 hour, after marking my key levels within this higher time frame, I want to go to the medium time frame, which are my M30 and M15. Okay, my M30 and M15, what I now use them to do is to read the market structure. All right, so I find entry levels. I use them to read market structure. Already from what we have seen here, we are bullish. Okay, so price is coming from this key level and then has broken this one, retested this key level, has broken this one again. So we are set to retest this key level that it has broken and then push up to the next one. That is what we are expecting. So we are bullish. All right, we have a bullish bias. So when I come to my M30 right now, what I want to do is I want to read the market structure that I can see. Now look at the market structure. What is the market structure saying here? That's what you want to read and find out. Now the market structure, the break of structures that I'm going to be marking here, I see them as my minor key levels. Okay, I just take them as minor key levels. There is a reason to that. Now we have a break of structure here to the upside. Now we also have another one, a break of structure to the upside. And see, so since price is breaking structure to the upside, that means we are very bullish, very bullish. So this is it. Price is breaking structure to the upside. Can you see that? Very simple. This is it. So when price breaks structure to the upside, comes back to retest the structure and then it is pushing up again. Okay, so here now again we have here price came and then also broke this structure here. This is it. That has broken it. So basically what you want to see is that price after as it breaks it like this, want to we're expecting that this move will take out this structure, right? We take out this structure. If it eventually takes out this structure, then we wait for it to return back to retest again, just like it has been doing. Okay, basically we know that. Okay, let me go to M15. This is it. You can see basically we know that price is heading to this key level as we marked from our higher time frame. That's where price is heading to. So what we expect to happen now, what we expect to see now is when price eventually break the high there, we expect to see it just like this. This is what we expect. Then this is what we are expecting. The retest, and then we'll find our entry there and then push to this key level. That is just it, guys. This is so simple. This is how you use your key levels to find support and to find high probability entry. So when I use my higher time frame to mark my key levels, I use my medium time frame to read the market structures. I now go to my M5 and my M1, which are my smallest time frames. What am I doing with them? I want to find entry. Okay, I want to see price give me good entry here. Now this move here might not even take out this. It might still come back to liquidate here and then use this other block. Okay, that is what is possible in the market. That is what is possible in the market. Can happen like that. We are not sure. You just watch it and let time reveal what is going to happen. That's what we do in the market. You allow time to reveal everything to you. Okay. But now let us see how this one played out. Let us see how this one played out. Let us examine how this one played out using. Let us examine this structure and see how price played out. Now, this is what I normally do when I see a structure being broken like this. Okay, during a retracement, what I do is this. Look at it. I pick my trend line, mark it like this. This is it. This is when price eventually got broken. This is when the trend line got broken and the structure was also broken. So trend line has been broken here, structure broken here, and then I want price to return to this place. This is my other block, so I can actually pick this, waiting for price to return to it. You can see price return to it. Then as price returns to it, on my M5 and M1, I look for my entry. Okay, this is it. On my M5 and M1, that's where I look for entry. Okay, so how I look for my entry is that I also use my trend line whenever price comes into this what do you call it, this area of interest, which is my other block. So let me go to M1. Probably I'll see things clearer there. Yeah, this is it. So when price came to this my trend line, when price came to the other block rather, you can see, then I pull out my trend line like this. This is it. So eventually I got a break of my trend line here, and then I also got a break of structure right here. You can see it. Also got a break of structure. So price came back to retest. Price came back. Let me zoom in. So I actually got a break of structure at this point. This is it. And then this was my other block. You can see price came back to retest it. As price came back to retest it, this would have been a sniper entry. This is it, a sniper entry. Okay, it's as simple as that. Now if you missed here, this is another leg where you could have entered. This is another leg also to enter the trade. Multiple entry opportunities. This is exactly how I use key levels. Now when I enter my trade here, I want to target this higher time frame key level here. This level that we marked out earlier, which was our break of structure. That's where I will target. Let's go to M50. You might see it clearer there. Yeah, this is where we had our previous high. I'll just target it. I can see how price hit it very easily. So guys, this is how I use the key level. That's how I use my key levels to find high probability entry. I believe you understand this. If there's anything you don't understand, let me know in the comment box below and I will be on hand to respond to your question almost immediately. Also, if you found value in this video, just smash the like button and subscribe to the channel if you are new, and turn on the post notification bell. Also, let me know where you are coming from, where you are watching from in the comment box. Then if you want to join my Telegram, where I share free signals almost every day, where I share free chat setups, let's just click the description box down below this video. You see the Telegram link, click on it and join us right away. Okay, thank you guys for watching. This is the Alpha Trade saying it can only get better. Bye.